Finally tonight, our expert panel. We asked them at the beginning of the year for their predictions on how key parts of the economy will fare. We're revisiting them this week, and it's the halfway point. And despite being out of the money on the stock market predictions and adrift on interest rates, no one's changed their prediction yet. So, are they faring any better on the value of the dollar?
It probably seemed like a courageous forecast at the time. It probably seems more courageous now, but currencies, when they move, can move very quickly. Now, we've had the view for a while that the Australian dollar is fundamentally overvalued. We think commodity markets may have run too hard, and with signs of a slowdown already emerging in China, and if the RBA doesn't tighten by much as some are anticipating, we still think that there is some downside risk to the Australian dollar, so we'd be sticking with that forecast.
Commodity prices look as though they have peaked out at the present. They're not coming off dramatically, but there's certainly a little bit of softness, particularly in the bulk commodities. We've also got the relative inflation and interest rate story, and that's where the uncertainty and risk lies, not so much from the domestic story. We're looking for higher interest rates by the end of the year, but what's happening in the US economy. They have stalled and stumbled a little bit, so maybe the rate rises there will be on hold for a little longer. But I do think we'll see something happen there from the Fed before the end of the year, and I think that will prompt a big change in sentiment. The Aussie dollar is also a very speculative currency, so when it moves fast. So at this point in time, I'm happy to stay with the 90-cent forecast.
I tend to say that the balance of risk is still to the upside. The currency's been above parity for an extended period of time, the first time really since 1983. But at the moment we have a lot of angst around in the global economic outlook. Weaker US, we've got the European debt concerns, but the currency's been very resilient, and it really hasn't been like this for many, many decades. So at this stage, I tend to think that it's unlikely that it's going to get down towards 95, despite all the turmoil that is going on in global markets.
We now expect the Aussie dollar to finish the year at $1.03. The Aussie dollar has held up reasonably well against bouts of risk aversion this year, and attractive interest rates, a rising terms of trade and firm underlying economic fundamentals continue to spur demand for the Aussie.
I'm expecting less negative news on the US or more positive news on the US, which will be a positive for the US dollar, and I think that might take a little bit of the shine off it. So I think we'll start moving back towards parity. So at this stage, I'm still reasonably comfortable with forecasting 99 cents or a roughly parity for the currency.